Kevin Hincks, co-host of Fast Market, is with me here live at the CBOE. Look, we had a tough end of the week last week. We've had a lot of developments over the weekend, and now some green arrows this morning as the markets have taken it in and digested it once again, which seems to be how the market has been behaving of late to almost all kinds of geopolitical and tension headlines. Your thoughts on the very latest right now?
Good morning, Nicole. You know, just looking at the futures and looking, frankly, at crude oil futures tells me that there's been no real escalation over the weekend. Now, there's been no de-escalation either, but I think the key to crude oil is the Strait of Hormuz. And that's why no disruption there, I think, has crude oil less concerned than it was on Friday and over the weekend. So I think that if you're monitoring crude oil, if you're monitoring tensions in that area, watch the Strait of Hormuz as long as that's open. Remember, because Iran needs that open in order to ship crude oil to China. And the U.S. needs that open to move crude oil. And President Trump wants crude oil prices to remain as low as possible. And Iran, frankly, needs to be able to move things in the Strait of Hormuz. So I think that's the escalation if something happens there. Besides that, we're looking at a market that's overall recovering, not as moving off the worst case scenario. What I like to say is, Nicole, the market always likes to go, especially in futures, to the worst case scenario and then work its way back. I think that's what you're seeing right now. Oil is still elevated, right? It's still up 10, 12, 11, $12 off its recent lows, but it's not going towards $80 just yet because at least there's been no serious escalation here. As we get to this 4-day work week, we'll get retail sales tomorrow. Then it's all about the Fed on Wednesday and their summary of economic projections that we'll get. That's for the U.S. markets. But as you know, Nicole, we're always right now watching headlines for any move in not only geopolitics, but local trade deals and things like that. So, yeah, there's still a lot going on for summer. The VIX is off its highs, it's below 20, but still 19.5 is elevated for this time of year.
Yeah, as you talk about the list, housing starts and building permits too, right? So we'll have a lot. And Thursday closed, right?
Closed, which, by the way, since we're closed on Thursday for your viewers, I was telling this to Diane earlier, jobless claims now come out Wednesday morning. So watch for those to come out. And then Friday, we don't have a lot of economic data there. So, you know, the Philly Fed leading economic indicators. So we'll kind of trail off into the end of the week. But as you know, headlines are what's driving this market right now. But I still think the Fed meeting, though they're not expected to move, Jerome Powell's press conference, the summary of economic projections, will be a market-moving event on Wednesday, Nicole.
Yeah, without a doubt. So I'm looking forward to getting in all of this news. But the escalation that we've seen between Israel and Iran over the weekend, obviously tough to bear for folks, but also it's about the nuclear story. It's about the oil story, because you did have Israel hit oil points too, and so the volatility. But what's interesting is that the VIX is below 20 this morning, so not particularly fearful at the moment for the major averages, right?
Yeah, it's up off its recent, it was getting down into the mid 16s, so it's definitely elevated, but just not as high as it was, and frankly, not as high as some people thought it would be, right? The market, even though we were down Friday, pretty solid down day, the recovery today and the fact that crude oil is actually lower today, that is like I said, working its way off a potential worst case scenario event here. So it'll be interesting to see how it plays out. Doesn't mean we're done. Doesn't mean volatility can't show up at any moment without notice. But at least for this morning and starting the trading day, things seem the temperature seems a little bit lower right now, or at least not going higher. Let's put it that way.
I almost can't believe it, because when you wake up, you're worried about a lot of things. I mean, you're worried about this really heating up between Iran and Israel. No one's sitting back in their chair and saying, oh, well, I guess it's okay. I mean, everybody's very worried. You have the questions about the United States, what involvement, what future involvement. That's worrisome. Assassinations of this one, of that one. I mean, it's awful reading about some of these headlines. At the same time, we're trying to keep it steady for investors. And investors seem to be extremely steady, almost more so than I would have expected.
Yeah, this market, and you're right, we've got geopolitical risk, we've got local, U.S. political risk with problems going on. I think a couple of things that are important this week. If you're looking, the 16th through the 19th, there's the Paris Air Show is kind of important. I think overall, watching the flow of headlines and the flow of news. But you're right, Nicole, it's almost like that the markets are getting more callous to world events and understanding that they may be short-term problems, but the long-term prospects for the U.S. economy is still pretty solid. We're still watching. Now, if you're Donald Trump, if you're the Trump administration, you don't like the fact that crude oil has rallied from $59 up to $72. So that is not working for you in terms of the overall fight against inflation and the overall ability of the Fed to lower interest rates. So that's problematic. Some of the numbers that we got in inflation last week, CPI, PPI, were firm, but they weren't as high as everyone thought. But then, just when you think you've got good news on inflation, you get geopolitical risk coming in at the end of the week. So, there's always something, Nicole, to keep markets. But you're right. I would call the overall reaction to these markets, to what's going on in the world right now, an under reaction to what's going on.
Yeah, sometimes we get knee-jerk reactions, and other times we get sort of this wait and see, or callous, or, maybe they're waiting for the next headline. In the meantime, Kevin, a great setup for this week ahead. The S&P is still above the 6,000 mark. People love that. We are not that far, folks, from all-time highs. Kevin Hincks, thank you.